The economic turnaround in the Philippines is being called one of the greatest comeback stories in recent years. There have been a series of upgrades in sovereign credit and competitiveness ratings. Today's GDP figures are encouraging, but what about the other Asian tigers? I'm Sophia Aribo, and you're watching Dukascopy TV. With me to discuss whether things are still roaring ahead is Shweta Singh from Lombard Street Research. Shweta, the Philippines have had more direct foreign investment, but not at the same level as other countries in Southeast Asia, such as Thailand or Vietnam. Can the Philippines continue with strong GDP? And what are the challenges for the Filipino economy?
First, globally, we think demand will remain deficient and liquidity conditions will become less easy. So in that sense, we like the Philippines because it's less exposed to external demand. Exports as a share of GDP are quite modest. It's less exposed to external funding because, the current account balance is in the positive territory. It's less dependent on China, which we believe is the most vulnerable emerging market. But at the same time, whether the 7% growth rate or so that it has seen over the last year, is it sustainable? My answer would be no. And we have been calling for a tighter monetary policy stance by the central bank for a long time. And more recently, we have seen a tighter monetary policy stance by the central government, as in it has raised the reserve requirement ratio twice already to absorb excess liquidity in the system before it starts to feed through inflation expectations, etc. But we would expect a more aggressive stance before inflation becomes a key problem. Not enough improvement has been made on the investment front, so investment as percentage of GDP is still quite poor in spite of recent steps undertaken by the government. It hasn't really picked up. So unless and until we see more rigorous pickup in investments, the current strong growth rate is not sustainable in spite of good structural factors.
The beginning of the month saw Indonesia post its lowest GDP since 2009. It's being blamed on the central bank's aggressive interest rate hikes. What are the challenges for Indonesia, and is this monetary policy the right action?
A very lax central bank and a lax policy by the government is actually responsible for the sharp pullback in growth that we saw earlier this year. And obviously, the recent taper tantrums is partially to blame. But the fact that the central bank fell behind the curve in the sense that it followed monetary easing when it actually should have been tightening in 2011 when GDP growth was way above trend, led to entrenched inflation expectations. And when there was a sudden rise in US real yields during the last summer, they were forced to tighten abruptly. And this tightening would have been less abrupt had they been more proactive in addressing the rising pressure on domestic demand. They had to pay back in a more severe way than they would have otherwise. And that's probably why we saw a sharp pullback in GDP growth.
And lastly, Shweta, there's been a lot of talk about the slowdown in China. How do you think this will affect the economies of the Asian tigers?
It's Asia that's the most exposed to China's structural slowdown, and within Asia, the Asian tigers are the most exposed. It's Hong Kong and Taiwan that are the most exposed, followed by Singapore and Korea. Now, Hong Kong and Taiwan have exposure basically through supply chain channel, while Korea has exposure through both supply chain and investment demand. And if the yuan should go lower, that would mean more competitive pressure on these exporters. So basically, they really are in a very difficult situation from Chinese slowdown. Korea may not so much because it has made competitiveness gains. Brand awareness for Korean companies is much better than, in case of Hong Kong, Taiwan, and Singapore, for example. And even exports as a share of GDP is relatively low in Korea than Hong Kong, Taiwan, and Singapore.
Thank you, Shweta. That's all we have time for now. You've been watching Dukascopy TV. Goodbye.